How's it going, everybody? Let's talk about real estate. And today we're going to do a quick market update for the month that just ended, August, and see what is going on here in the Los Angeles County area, as well as the Orange County area, both areas that I work in as a real estate broker. So let's go ahead and jump right in. So the first thing I want to cover really quickly is just the mortgage rates, the 30-year fixed mortgage rates, as you can see here. And we have seen quite a bit of relief here. I mean, over say, the last, 4, 5, 6 months, we've been kind of gradually going up and down. But for the most part, if you drew a trend line through it, we certainly have been trending downwards. And right now we're around 6.5% or so, give or take. So certainly quite a bit better than it was several months back. And this is certainly helping to stimulate the market to some extent. Now, of course, the government is trying to pressure the Federal Reserve to lower rates right now, but we're actually seeing something strange in markets, and that is long rates go up. So there's no guarantees we're going to really see much lower rates anytime soon, in my opinion. In fact, they could stay elevated or potentially go much higher if the Fed tries to start lowering and the markets say no. Obviously, inflation is pretty high right now and it's been trending upwards recently. So lowering rates with rising inflation is generally not the best strategy. Now, diving into the actual details for the local housing market, we see here Los Angeles County and median prices. I mean, they trended down both over the last couple months. From June to July, we saw a decline. And then from July to August, through August, we also saw a decline. But interestingly, if you go all the way back here to April of 2022, you see we were at 900,000 for the median price. And today, 3 years later or so, we're at 905,000. So almost no real price growth from that peak that we reached in 2022. We've really just been kind of in a sideways trend for several years now. And obviously the main reason why is because of these higher interest rates. Now, when we look at the supply of inventory on the market, this is where things are looking worse and worse each month that goes by. I mean, you could see we kind of hit this low here a couple years after COVID, and then we've just been rising and rising and rising. The trend line is getting pretty scary. We're seeing a lot of growth. We're at 4.7 months. That is a 20.5% increase in the supply of inventory on the market. That means there's a lot more homes that are out there that are sitting that nobody's buying. So if you're a seller right now trying to sell into this market, it is more important than it has been in a very long time to make sure that your home is positioned well. Meaning that it's either priced right or it is very attractive compared to the other properties that are on the market, or a combination of both, such that a buyer is going to be more interested in your property than the competition. So that way they write offers on yours and end up buying it. And the last thing we'll take a look at here is closed sales. And you can see we're down 11.3% year over year. I mean, pretty similar overall to where we've been for the last 2 years. But the last 2 years have been pretty terrible in terms of closed sales. You could see we had COVID back in 2020, and then there was a huge spike in activity. Everybody was trying to move, get a bigger place because they were working from home. They needed more space. And then as soon as rates started to go up, we just see a massive drop off in the number of sales making it to the closing table. And for the last 3 years or so, we've just been doing pretty poorly. And then again, we're down 11.3% year over year on top of this already slow activity or low activity that we've seen for the last couple of years. And real quick, guys, if you need help getting your home sold here in Los Angeles or Orange County, I'm here to help. Let's make sure you get the best price possible. You get your home sold on a timeline that makes sense for you. And also, if you're looking to take advantage of these lower rates and buy a place, reach out to me on that as well. My contact information is down below. So next, let's take a look at what's happening in Orange County and compare that to Los Angeles County. And we can see here, very similar looking to Los Angeles County. So we saw from June to July quite a significant drop off. And then again from July through August, another decline in the median sales price. Not quite as extreme in terms of where it was in 2022. So there has been a bit more growth, as you see here in Orange County over the last 3 years. But again, for the last, say, 2 years, we have been trading mostly sideways. And in fact, we're now lower than we were going back to May 2024. Now, if we look at the supply of inventory in Orange County, we see a very similar trend. We're only at 3.5 months, which is a little bit lower than we are in Los Angeles County. And then here for the last couple months, we've really been going sideways in terms of inventory. And that is something I talked about on this channel before. We have seen a slowdown in new listings. I think a lot of sellers maybe are getting a bit discouraged because they're seeing a lot of their neighbors' homes that are on the market where maybe they didn't get the offers they were expecting, or they didn't get any offers at all, or the home sat for a long time. So I think a lot of sellers are deciding or trying to hold out, hoping that maybe conditions will improve or maybe interest rates will go down somewhat, and then that'll help them either get a better price or make selling easier. And I do want to say here, if you have a home in a very desirable area, there are plenty of areas in Los Angeles and Orange County that are still selling very well. It just depends on where you're located, the price point, the condition, the number of homes on the market, and so on. And the last thing we'll take a look at here is closed sales for Orange County. And we see we are down 1.8% year over year. So not too bad, except for if you contextualize it going back several years here where we were seeing a lot more activity, almost double the level of activity in 2021. And then now in 2025, we're seeing about half the level of activity, and we're still trending down even compared to the last couple years. For instance, here in May, in 2023, we hit 2,032 sales. Here in 2024 in May, 2135. And then if you compare it to May 2025, we're down at only 1816. So we're just kind of seeing a continued decline, continued weakness in the market. So the longer that these rates have remained elevated, less and less homes are actually closing, and the amount of inventory continues to rise, even though amazingly median prices are pretty stable overall. And I've also shared why I think that is, and that is really because the homes that are actually selling are generally going to be the nicest, most attractive homes, and those are still fetching similar prices to what they were a year or 2 or 3 ago. However, there's a lot of inventory that isn't so nice, maybe is overpriced, and so those homes are not going to sell. And so we're not seeing the true prices that those homes would need to be priced at in order for them to sell showing up in this data. So you have to realize that this closed sale data and these median prices only show us the prices of the homes that are actually selling, not the ones that didn't sell for one reason or another. So thank you guys so much for watching. I appreciate you checking out another video. Let me know what you're seeing in your market down below. Let me know if you think the Federal Reserve is going to be successful at bringing down the long end of the curve, the yield curve. And also don't forget to like, share, and subscribe if you haven't already. Thanks again, and I'll see you on the next video. Take care.